March 2020, May 2020, when everything was kind of up in the air. Just as a show of hands, how many in the audience received the PPP loans? And have you had them forgiven yet? Have you gone through the forgiveness process? Okay, kind of, right? Everybody's a little bit here and there. So wanted the bankers on the panel to talk a little bit about forgiveness, pitfalls or positive things about forgiveness so far. What have you seen working with the SBA and then also working with your clients about the forgiveness process?
Sure. I can tell you that at TransPecos banks, let's see, we did about over 3,000 PPP loans. About half of those we've applied for forgiveness, and every single one that has applied for forgiveness has received that. So far, we haven't had any denied. We've only had about 25 clients not request the full forgiveness, so it has been very successful, and we're fortunate those applications are trickling in. We still have quite a few to get through, but that's helped us with our workload since they have trickled in, definitely.
Well, and so with forgiveness, obviously comes tax implications. So, Christa, talk to us a little bit about how PPP is being treated amongst your clients, and then also what are some other considerations around the PPP for tax purposes?
So PPP, along with so many different accounting and tax credits that have rolled out this past year, has fallen into that gray area that they're still trying to figure out the various ways to make it deductible. As you may have seen in the recent weeks or months, PPP is finally tax deductible along with the related expenses, which wasn't like that before. And so, that was a big win from a legislation standpoint. So from a forgiveness standpoint now, that's where it gets a little bit gray, because you have your financial records and then you have your tax returns. From a financial standpoint, there's two different ways that you can record your forgiveness or your PPP loan. One would be you can record it as debt. And when you record it as debt, that just means that you're taking a very conservative approach, that you're going to wait for that official forgiveness notice before you actually claim the income to your income statement, which will then roll into your tax return at that given point. The other option would be a little bit more aggressive and a little bit more of a probability standpoint is if you feel very certain that you are going to receive forgiveness, but you have not received the official notice, there is some accounting guidance that is out there that says, you know what, if you feel really good that you're going to get forgiveness, you can support it, you can go ahead and claim that income as you're incurring the expenses. So if you got $2 million, you incurred $500,000, you can go ahead and claim $500,000 of the forgiveness and apply it to the expense as it's being incurred. Now, the problem when you do that is from a tax standpoint now, you're gonna have to really prove to that CPA that you feel confident on that forgiveness. And so that part from a tax standpoint on can you claim the forgiveness before receiving the notification is still a little bit gray. It's still a question that we're looking into, and hopefully we hear more information coming out in the next couple of weeks, couple of months. But with that said, I think what we prefer as a CPA is go apply for the forgiveness so we don't have to figure this part out. That's probably the easiest part is get that forgiveness, make that application so that it can all roll into your 2021 return.
Well, and also I want you to, you mentioned to me that with maybe PPP1 and PPP2 falling on the 2021 financials, what are some changes that have happened in terms of, if I'm a restaurant or a bar, I could be looking at a pretty significant, profit on paper in 2021. What are some of the things that have changed that maybe allow some of those gains to be offset on previous years?
So from a standpoint, looking at your 2020 financials, I'm assuming a lot of folks incurred a loss. It's a given. So in the recent past year, the CARES Act rolled out a new law that pretty much said if you incurred a loss in 2020, you can actually carry that loss backwards or forward to apply it against the previous gains that you may have had or the upcoming gain or net income. So if you look back on your 2018 returns, 2019 returns, and you probably had a solid year those years, and you probably paid a solid taxes on those years too. But looking at 2020, if you incurred net operating losses, there's now this guidance that says, take that net operating loss and apply it, go back and amend some of your returns, because now you can actually get a refund for having those losses. That was actually not there before. It was there, several years ago. They changed the law. They didn't want to do carrybacks, and they brought it back specifically because of the pandemic and what's going on. A lot of folks don't know that part, and they're really leaving a lot of free money on the table. And so that's something that I would say, you have some gains, you probably had some gains in previous year. Take your loss and capitalize on it and go back and amend some of your returns if you can.
Well, and while we're talking about leaving money on the table potentially, I'd be interested to know from the audience, how many of you are familiar with the employee retention tax credit, and how many of you have gone and amended your 941s for 2020 to capture those credits? So if you're unfamiliar with it, the other thing that changed in December was the law was written, and they came back and they said initially you couldn't use PPP, you couldn't get the PPP and take the employee retention credit. You had to choose, you had to do one or the other. But then they came back later in December and said actually you can. You just can't use the same wages. So for the 10 weeks or the 24 weeks that you used PPP, you could not take that credit, but for the payrolls for the remainder of the year, or even before the PPP a little bit, there are tax credits available on those wages. So if you haven't talked to your bookkeeper or your CPA about those credits, it's called the employer retention tax credit, please do so, because that is additional money on the table for your business. Now, I want to shift a little bit more to the present and maybe moving forward, and this is where the bankers can come and help us. Obviously, financials are looking a little bit different these days with your restaurant and bar clients. How are the banks looking at, assessing need, and then, what are some of the programs that you guys are encouraging, maybe those in need to consider?
Sure. Christa and I were talking about this a little bit before we started today, but obviously bankers love to look at your last few years of history before deciding whether or not to give you a loan, especially the last full year. But we all know 2020 was an anomaly. So right now we're looking at even some restaurants, doing some 7(a) loans. We do a lot of government guaranteed loans. So 2020, we all know what happened. We're looking really heavily at 2018 and 2019. Also, how are you doing so far this year in 2021? So just for anyone out there thinking that banks aren't lending, I want to encourage you to go to your banker. I'd love for that to be TransPecos Banks. If you have a great banker that helped you with PPP, I encourage you to go to them also. I know lots of folks got lost in the PPP process and could not get through to their bank and ended up going with a different bank that helped them with PPP. So if that happened to you, I really encourage you to stick with that bank, or wherever you go, make sure you have a personal contact. I think a lot of people realized during the pandemic that's the most important thing, is that relationship. So I encourage each of you to do that. And also, Blake, you want to speak a little bit about 7(a)?
Yeah, so speaking of kind of leaving money on the table and looking forwards, the SBA 7(a) program isn't necessarily a new program, but they've kind of revamped it a little bit to benefit the small businesses. Currently, the SBA 7(a) program are loans up to $5 million. 90% of these, or up to 90% of these, are guaranteed. The new piece that they've changed, and which benefits the small business owners the most, is the first 6 months of fees up to $9,000. That's your principal, your interest, or any additional fees are actually covered by the SBA. So it's not coming out of your pockets in a sense. There is a bit of a time crunch on this though, as you need to have your loan number and all the due diligence items done by September 30th. Again, if anybody's interested in that, feel free to reach out to myself or Stephanie, and we can definitely help guide you through that process.
Well, and so that's going to be a very valuable option for a lot of people. I'm going to ask another question, a lot of raising hands here, but the other acronym that we haven't touched on is obviously the RRF. Is anybody in the audience fortunate enough to have gotten the RRF? Not as many, right? That was a very kind of sought after program, but you had to be organized. You kind of had to be ready to go, right? Because it was first come, first serve. And I think that, the one thing that all of us shared in talking about that is, the bookkeeping, the accounting, and the banking maybe is not the most glamorous or fun part of the restaurant world, but the last 18 months have shown that those relationships are just as valuable as the other relationships you guys are here building at TRA Marketplace, right? Where we don't maybe have the flashy booths or the cocktails to give you, but hopefully, when you're going through your financial process, you're thinking about those relationships and you're staying organized, because those are the things that really came in, to become a great need here in getting through this crisis. Christa, I want to talk to you a little bit more about some of the other things, tax consideration wise. With the RRF, I know that a bunch of people wanted to have their tax returns done, but then we had the winter storm, which kind of here in Texas, obviously, on top of everything else, we got another little crisis that we got to deal with. Talk to us about, you had mentioned some of the stuff. Let me see here. Checking my notes on the winter storm. Oh, the loss deductions surrounding the winter storm, but then also, talk to us about that.
Okay. What he was saying was that, CPAs, bookkeepers became the forefront of this past year. And normally, they're on the back burner and you're focused on operations. But, we learned a valuable lesson when it came to the revitalization fund. It happened so quickly and you had to turn around financials so quickly. You didn't have time to suddenly start reconciling and suddenly hiring someone. You had to be ready. Same thing with PPP, and what we saw was our phone was ringing off the hook because so many folks had extended to June 15th. But the revitalization fund happened, April, May, and you had some options, if you guys recall when you were applying, to provide your POS system report or provide your financial statement report, or the third option was to provide your tax returns. And so many skipped 1 and 2 because they weren't ready, and then our phones were ringing that, hey, I know I extended to June 15th, but I need my tax return tonight. We got to apply day one and make sure we capitalize on that. And that's where I would say, going into this recovery year and working and making those relationships with your banker, you're going to see that previously to the pandemic, if you had a lender or investor, they probably requested your financials maybe on a quarterly basis, on an annual basis, but that's changed now, and now it's monthly basis until they can rebuild that trust within your financials. And of course, everyone's going to have a different relationship with their banker and lender and investors. But with some of this revitalization fund, the requirement is monthly financials and timely preparation of your tax returns, and you're going to be having to provide so much proof over the next what was it, till 2023. So just so much going on right now that you don't want to wait last minute anymore. I mean, that mindset really has to change, and just rebuilding your books, those relationships, and that trust within your relationships. From a winter storm, which just threw in another wrench for the year when we thought we were back up and going. Yes, there is a casualty loss deduction. If you're not aware of that, if you incurred some losses from the winter storm, there is that deduction going into 2021. You can also use it for 2020. I believe you can go backwards. So if you've already finished your returns as of June 15th for 2020, know that you can use that deduction going into 2021. I mean, I think there's so many credits that we can talk about that from this past year. And I hope that you all are having those conversations real time with your CPA, even if you don't, have the technical detail and background, very high level, just knowing that there is a casualty loss deduction.
Well, and that's what I was going to say. Part of the title of this this talk was about fraud risks as well. And, I know our bankers here can speak about this, and that is, those forgiveness applications, tax returns, I mean, the attestations that you're being asked to make, you need to understand what those are, because, we don't know, we'll see, but it is likely that there will be audits of these programs, PPP, ERC, and, even the 941, you were saying that, the form has changed. So being familiar with what you're signing, understanding what it's saying is a huge part of just responsible business ownership. And I think that, we've all been thrown a lot of new programs, and taking the time to understand them. I think it goes back to, and I'm sure you guys are like this at the bank, where it's like, pick up the phone and call us, ask us. Don't just send it in. Don't, educate yourself before putting a document into the file, right? Let me see here. What else do we want to talk about? A little bit different, not necessarily on the topic of acronyms, but you were saying that, Christa, you were sharing some new revenue recognition rules around gift card accounting and things, and loyalty programs. Talk to us a little bit about how those have changed.
So there's one thing I noticed over the past year is a lot of restaurant owners had to get very creative on how to incentivize customers to come back inside into their restaurant. So, a lot of that was gift card incentives, a lot of that was loyalty programs and points and the apps, which are all really great things. I know I have probably 10 more apps on my phone than I had, in 2019. With that, in 2020, a revenue recognition standard was released. One is very helpful, the other one's a little bit of a setback, but from a gift card standpoint, the way that gift cards are accounted for is once you sell that gift card, you can't claim that revenue until it's actually used and redeemed. So that's step one. But what happens is so many folks who don't use those gift cards, you have this liability that just sits there for years and years and years, and you're just waiting for that customer to use that gift card. So this new revenue recognition standard came out that pretty much said, if the restaurant management can come up with a policy that says, any gift cards that haven't been used in, let's say, 3 years, we deem it very remote that they will actually utilize that gift card, and we're going to go ahead and claim that income. That is a policy that you as restaurant owners, your accounting team can implement based on historical data to get rid of that liability. I have clients who have millions and millions of gift card liability that just sits on the books and they don't know what to do with it. With this new standard, it now allows you go ahead and early recognize it even though it hasn't been redeemed, because you're pretty much saying that it's 5 years now, I'm pretty sure they're not going to use it. So from that standpoint, it's a very great thing to clean up your liabilities. From the other flip side is loyalty programs, incentive programs. So if you, let's say someone comes in, they pay $200 and you give them a $10 reward certificate to use within the next month or 2 months. That $200 that they paid, unfortunately, you cannot claim all $200 today as revenue. You're going to have to defer a small piece because you still owe them that $10 within the next month or 2 months. So you're deferring a small portion of that revenue until that certificate or the points expire. So you have your gift card where they're saying go ahead and early recognize the revenue if you feel like they're not going to redeem it, and then you have the loyalty program where they're saying no, you can't recognize all today. You got to defer some of that, you know, when they actually do redeem those points and the certificate. So if you have both, maybe it'll, you know, net each other, but just something to consider. You know, I like to tell my clients, hey, before you roll out an incentive program, let's talk through the revenue recognition standard, because it could get very complicated very quick, and there's a lot of different pieces you're going to have to track if you go that route.
All right, so we've got about 10 minutes or so left here. I want to hear a little bit more from TransPecos. What are some things that we haven't talked about that you guys are thinking, you know, when you were preparing, you know, restaurant-specific things that you really wanted to make sure everybody hears? Do you have anything that we haven't touched on?
Sure. I know one other thing we were talking about before this started was, I don't know if any of you guys have loan agreements with covenants, debt service coverage requirements. I know that's been really interesting for everybody, but the way we're kind of looking at that, and the way I think most bankers are looking at that is, obviously 2020 was most likely a loss, not your best year, obviously, and you may not have that PPP income showing until 2021. However, the way we're doing that is really case-by-case basis. We don't want to call any loans we don't have to. We don't want to have to downgrade any loans we don't have to. And trying to be very reasonable about moving that income where it was needed in 2020. So again, I just encourage you to talk to your banker if you do have those covenants, and talk through each of those scenarios.
Fantastic. Well, I don't know that I have too much more to cover. I'm thinking if we stop a little bit early, we could probably take some questions. I don't know. Specific questions may be difficult. Everybody's case is, you know, unique. But if there's any sort of general questions about any of the programs we mentioned, we're happy to try and get those answers to you.
Hi, thank you for being up there. I have two questions, one on the banking side and one on the tax side. So on the ERTC, that's a really, really good program. And I took advantage of it. This year is back to normal almost. But I was surprised when I filed my 941. I filed it on like April 15th. On May 18th, I got the refund checks. And they were pretty substantial. But right after that, I just realized it was taxable, so I had to send money right back on my quarterly payments. So if the PPP was not being taxed, and I don't know if the restaurant, the relief fund was as well, why is there a chance that the ERTC will be made tax-free as well?
You know, I think that's a really good question. You know, right now I don't truly have an answer for you. I hope an answer comes out pretty soon. You know, I know the TRA fights very hard for just the PPP being tax deductible, and so I would imagine hopefully we can hear something come back soon regarding the ERTC. You know, that's a tough question.
Okay.
I'm so sorry, I don't have an answer for you, but I'm very hopeful on it. I mean, a lot of the new credits follow the PPP. Same thing with RRF.
So we
RRF
need to fight for it.
Yeah.
Okay. The second question was on the banking side. You'd mentioned the SBA loans. Is there a cap on your net worth or project size where you could qualify for that program? Because it seems very lucrative.
No, there's not. So it's in tiers. There's a tier of under $150,000, a tier between $150,000 and $250,000, and then there's a third tier that's above that. And based on whatever your project need falls in, there's a different interest rate, periods, guaranteed limits, and so on. So it's very, very specific to whatever your need is, your project's need.
Sorry, I'm going to grab the mic back. I wanted to talk a little bit about ERTC a little bit more because it sounds like, you were fortunate enough to move pretty quickly and get your Q4 941 and Q1 or Q1. One thing that we're experiencing, and I'll recommend all of you, if you are on Twitter, one of the things that really helped educate me throughout this process was a hashtag called Tax Twitter. Tons of CPAs around the country talking about these issues, talking about what they're seeing. It's very informative. A bunch of other CPAs use it to kind of teach each other on some of the interpretations. On that hashtag, you will find that with these 941Xs, which are paper amendments, that Ogden, Utah is backed up with their mail. And so if you've put in your 941X forms for Q2, Q3, and Q4 of 2020, they could be, more than likely, they're sitting in a trailer waiting to be opened. And so, this is where banking comes in a lot in terms of, and I'll be interested to know what the bankers look at this, but there are credits that are pretty guaranteed on their way, but they're not there. And the cash is vitally needed for a lot of y'all to, continue your recovery. And so, like we experienced with PPP and with everything else, right? These bottlenecks, because everybody went rushing into whatever supply chain need they had, but we all went there together. So we all got in line, and now they're kind of causing these backlogs. And so I know that a bunch of people weren't fortunate enough to even amend their Q1 of this year to capture those credits. And so, I will see. I don't know how many will come to you at the bank and say, hey, I have this, but here is the form. It is signed. It is on its way. The check will come in. Can I borrow against it? Can I get a line of credit in that amount so I can utilize the money in the short term as part of my recovery, then clear it out, on a shorter term basis. So I wanted to make mention of that because, I'm telling my clients all the time, just trying to say to temper the expectation, if you catch it on your Q2, yes, it is a 4-week turnaround, because with normal filings, that system is, automated. They receive you can e-file your 941 with the ERC on it. They run the numbers and they print the check. But for the 941Xs on those amendments, it will take some time. And I've yet to see actually any of the Q4 amended 941Xs that we filed back in January come through in form of a check yet. So it's one of those things where we hope they can move faster, but we're all at the mercy of their speed. So any other questions? More questions?
Okay, so this is kind of employee retention credit related, also in statements and questions, but I feel like ERC is kind of like the forgotten child here that a lot of restaurateurs are not talking about, and there's so much labor in restaurants. When you add it up, the ERC is quite substantial, and in a lot of times it's higher amounts than PPP money if you're eligible in 2021. Question would be, if you're eligible in the first part of 2021 for ERC and you also have PPP funds at the same time, and you're trying to maximize both programs, obviously you want full forgiveness for PPP, but you've got ERC running at the same time, and so your employees under ERC, you can get a refund up to 70% of their wages, right? And so if you have $100,000 in wages, 70% ERC can pay for. The other 30% is off limits on PPP. From what I'm hearing, you cannot apply PPP funds to that other $30,000 because that $100,000 in funds is earmarked for ERC. And so just a broader question about, maximizing ERC and PPP if you have both of them running in 2021. Any strategies?
Well, I don't know if our mic's still on. Yeah, I was like, he can answer that.
I'll use this one even though. Hello? Okay. So we were talking about this, and it was in the ever-changing deadlines and rules, right? Because initially ERC was going to only be available for Q1 and Q2 of 2021. They had not extended it through the end of the year. They have now since extended ERC credits all the way to 12/31, which threw in this overlap. If you're running PPP2 and say you waited until late in that process to go to your bank, which I know some people did before it closed, even though they then extended the PPP deadline, you are still probably within your 24 weeks, and your 24-week covered period will go well into Q3. And so the strategy that I've seen is, well, the good news is that they added perishable goods to the non-payroll portion of PPP. So what you do is you don't got to get to 100% on your payroll, you got to get it 60%. And so it really is, my thinking with my clients has been, I'm giving it away for free now, but that's fine. That is Q3. If I've got 8 weeks or 6 weeks, I'm gonna focus on that first part of Q3, and I'm gonna grab my PPP then, and I'm gonna go ahead and take the full ERC in Q2, and then I'm gonna pick back up on ERC whenever I exhaust PPP. Or you can go back now, where we're kind of in this no man's land, but you can look at the beginning of Q2. Maybe you were on your way back already, and you were able to have a pretty healthy payroll in early Q2. Get it off, find the shortest window of time in Q2 that satiates your exhaustion, and then on the other side, if it's at the beginning or even on either side, take the ERC there. Ultimately, my feelings are, hopefully the recovery continues. We're able to find staff, right? Get them in the door, get them trained. A lot of training wages right now. Q3 can become a pretty healthy ERC quarter if you qualify. Obviously, qualifications for ERC, now that all the mandates have been lifted, are based off of your revenue compared to 2019 if you are in business for all of 19. If you opened in 2020, it's based off of your annualized revenue for 2020. It can't be over $1 million annualized. But most of you are probably open in 2019. You've got to look at your Q2 of this year, compare it to your Q2 of 19, see if it was down from at least 20% or more. If so, then you have Q3 ERC available to you. So good question. Definitely one of those. I think you're exactly right. I think that all these acronyms and programs came about in such a fast way that all of us on stage and all of you out there were working as quickly as you could to try and figure out, well, wait a minute, what does this really mean for my bottom line? What does it mean for my restaurant? How do I do all these things in unison? And we're still trying to figure that out. But I would say that, The good news is how long, it's up to 3 years that you can amend your 941s retroactively, I believe.
I believe so.
So if your payroll provider is on autopilot and they're just sending in the 941s and you can't get to them, it's not the end of the world. Reach out to your CPA, reach out to your team, finance team, and put pen to paper. Figure out how you can maximize it, and then go ahead and do a 941X. Doesn't mean that the money's going to be here soon, but it does mean that you are entitled to it, and you will get that relief. So I would say, if you don't have the time or the bandwidth to figure it out right now, do what's best for your business today, and then down the road, sit down with one of your providers and figure out how to maximize it. Any more questions out there in TRA land? One more follow-up?
So you'd mentioned the qualification were on cells. The other qualification is if you either have operate a business in another state that still has a mandate, or one of your suppliers is. Texas has already ended it. What is the likelihood? Almost all of us have experienced supply chain issues, and our supply chain comes from many different states, which probably a few products would be disrupted because of the COVID requirements. Does that still allow us to claim the ERTC into the third and fourth quarter?
Talk to your CPA. No, I mean, in all seriousness.
I don't think your mic's
Oh,
working.
it went off.
You're just gonna have to shout.
Nominal effect, right? It's a definition that people are going to have to advise you on.
Are we out of time?
Bags on the way. Thank you. Any more questions? Or should we all run over to the cocktail presentation before they're out of booze? Well, thank the panelists for being here. Great to meet you all. Great to talk about this. And, for all of you that want to contact any of us, all of our information is on the Texas Restaurant Association website. Please feel free to reach out. We're here to help. That's why we're here today. So thank you all.